It's 6 p.m. and you know what time it is. It's weekly Wednesday webinar with your friends here at the United States Senate Federal Credit Union. Welcome everybody to a new weekly Wednesday webinar, or how we call it internally, the WWW. We're excited to have you here with us. Thank you so much for attending. Thank you so much for your support. And as we have always said, and I'm always emphasize it, without you attendees, without your support, this wouldn't be possible. So thank you so much for being here with us. We know that everybody has a hectic life, family, kids if you have kids, work, so many factors. But you decide to learn something new with us this evening. So that's very, very appreciated. Thank you so much. My name is Eddie Villanueva. I'm the official MC of the weekly Wednesday webinars and the credit union, they say sometimes. So I don't know if it is true or not. But as you can see on the screen, we have some beautiful, beautiful graphics, and we're going to talk about the path to home ownership. Home ownership perhaps can seem a little bit intimidating, on paper. Perhaps you don't know where to start. What documentation do you need? Well, we're going to go over all those logistics this evening so you can see that it's a seamless process with the United States Senate Federal Credit Union. And I know that's, a lot of your dreams, perhaps you already have a home. Maybe you want to invest into that second home, or perhaps you don't have a home yet and you're trying to buy your first home, and that's very exciting. Um, and I know we have said in different topics that we talk about that buying a home probably will be one of the most major big purchases that you will do in your lifetime. So sit down, relax, get your dinner, get your coffee, water, whatever it is. No matter what time zone it is, where you are, no matter what state you are, but we're just excited to go through this topic. And we have a lot of surprises for you this evening. So please stay tuned into the end to see all those surprises. Also, I want to let you know that we love engagement. We love engagement. We want to make this very interactive. So please, if you have any comments, any questions, any concerns, or if you just want to say hi, please make sure that you use the chat feature or the Q&A. And we will go over all of those questions at the end of the presentation. So once again, thank you so much for being here. And I see the attendee list is getting bigger and bigger. I want to give a special shout out to our colleague Limber. Limber, I think this is the first time that you attended a weekly Wednesday webinar, 6 p.m. edition. I know you told me that you're looking into doing different, projects in your life. So hopefully you learned something new. So Limber, shout out to you, my boy. I'm so glad that you're here with us. Also, Ava, I was gonna give you a shout out. Ava, I always see you. I'm always watching. I'm always watching you, like Ross said on Monster Inc. I'm always watching you, So I know you're here. So thank you so much for being here. We appreciate you. This is your first time joining the weekly Wednesday webinar. We hope that you are ready for a thrill. We hope that you enjoy it and you become a regular. And if you have attended a weekly Wednesday webinar before, welcome back. Thank you so much for being here once again. All right, Kim. I think went over my time, so I owe a minute to Carrie because she only pays me for 2 minutes. So I want to pass it on to our membership development analyst, Kim Freely, with the official introductions.
Eddie, thank you so much and welcome everyone. Appreciate that introduction. You already know Eddie. We are going to go ahead and introduce our panelist team, and that way we can get started and respect your time. We have Carrie Lazar. You know who Carrie is. She has been here since the beginning. She is not only the marketing communications manager, but she's also the person who has put together all of these graphics, the PowerPoint. So appreciate all that Carrie does to make these webinars happen. We also have Kelly Pasilio. She is a special guest this evening. She is the United States Senate Federal Credit Union Manager of Real Estate Lending. So she has lots of knowledge. We are so honored and grateful that we have our colleague Carrie here this evening as well. And the person that is did I ever say who I was? I'm Kim Fridley. The person who is going to be actually presenting this webinar this evening is someone who has lots of knowledge in the credit union industry across every single department. His name is Milton Aguilar Bolonos. He is my trusted leader. He is the membership development manager, and just so excited for him to present tonight. So Milton, take it away.
All right, Kim, thank you so much. And I truly appreciate that introduction, that amazing as always. And not that I feel like extra pressure today because it's normally either Kim or Jonica presenting. So I get an opportunity every now and then, but I think today I do have big shoes to fill, and I will most definitely try my best. And hopefully you take something away from this presentation. Also, before I start, I just wanted a couple of housekeeping rules that I would like to share with everyone, and that is that we love participation. So please, at any point, you have any questions, feel free to use the chat feature or the Q&A, and our very own Andrea Londono, who was off camera before we started the presentation. She's going to be reading those questions towards the end, and it is our commitment that we will answer every question before we let you go tonight. So, with that being said, let me turn off my camera here so you're not distracted by myself, and let's dive into the presentation. So, the path to home ownership. This is going to be a fun one. So what we're gonna talk about today, so pretty easy. We're gonna walk you through the home buying journey step by step, starting how to get ready before you buy. From there, we're gonna talk about searching for a home, making an offer, applying for mortgage, preparing for closing, and lastly, planning for successful ownership once you sign all those intimidating documents that I know a lot of people get a little scared by, but you know what? It is not that bad. I will tell you right off the bat, it is not that bad. I know it's a lot of papers that one that you sign once you get to your closing date, but once it's done, it's truly you'll be surprised that the experience itself is not a bad one. So if you are thinking about buying, if you're currently leasing or you're living with parents um or whatever the situation where you might be today, and you're saying to yourself, you know what, it's the middle of 2026. I know the rates have come down a little bit. A lot of people were actually waiting for the rates to start dropping, and now it might be the time where you want to start getting ready for it. And so, if that is you, again, you are definitely in the right webinar for today. So, with that being said, let's get ready. Let's dive in, and start with preparing to buy. So making the decision to purchase a home, it's an exciting one for sure. But sometimes it could also be a little overwhelming. Time, houses are typically, as Eddie stated, buying a home is probably going to be, and for most people, this will be the largest purchase that you will ever make in your lifetime. So you want to make sure that you are definitely ready, you feel confident before you start getting into the process of home buying. So with that being said, one of the first things that you can do when preparing to buy a home is to start gathering all the documents that your lender is going to ask for. Exact requirements, obviously, it's going to be a little different for every lender. Not everyone is going to ask you this exact same thing, but just about everyone will definitely ask you for some proof of income. So what do we mean with that? If you are a full-time employee and you work for either in a private or public sector, they're going to be most likely asking you for pay stub or any other proof of income that shows how much money you're bringing in on a monthly basis. Your W-2s and tax returns, most likely they will be looking for at least 2 years of tax history along with your W-2s. Your bank statements, that is another thing that a lot of lenders will be asking for before you get into the process of the pre-approval. So it is very important that you start gathering all these documents because 9 out of 10, they will be asking for the stuff that you see on the screen. Also, something else that you might be asked is going to be any assets or investment statements that you may have under your name. If you are expecting to receive a gift from anyone, your parents, I don't know. I'm just thinking out loud here. But if you have parents, siblings, or anyone that might be nice enough to say, hey, I know you are getting ready to buy a house, and I want to help you with a down payment. Here I will be giving you a gift. So if that is the case, most lenders will ask you to provide a gift letter stating that the funds that they're giving you is actually, in fact, a gift. And lastly, is going to be for those that are currently leasing, they are going to probably ask you for your rental payment history. This one, again, it really comes down to who are you talking to. What, different lenders, as I stated, they ask different questions. So but typically the stuff that you see here is what most everybody is going to be looking for before you start the process of your pre-approval. So again, pretty quick, let me go over this again. Your pay stubs, W-2s, bank statements, any asset or investment statements that you may have. If you're going to be receiving a gift from anyone, you have to have a gift letter stating that those funds that you received is a gift, in fact. And lastly, any rental payment history. So those are the things that I would say about 90% of the lenders will be asking for. In other situations or different cases, others may ask for something differently. But again, it's almost likely that what you see in here on this particular screen is what they're going to be asking for the initial pre-approval process. Now, once you have your documents in order, the next step is to build a realistic home buying budget. And this is very important because you want to start by looking at your income, especially your net income, right? So when we say your income, we are referring to what are you bringing home after all your deductions, so your taxes, anything that gets taken out of your paycheck, retirement, I mean, you name it, and medical insurance, all of that. Don't count on that. Just count on the specific amount that is being deposited into your account. Then what do we do after that? So the next thing you want to do is review all your monthly expenses, any bank and credit card statements that you can review to have an idea as to where is your money currently going into. This is going to help you identify any patterns in your spending. Since expenses change from month to month, it is helpful to review at least 2 to 3 months to have a better idea as to where are all of your expenses going into. So, and again, this is a for those that attend, especially the webinars that I do. I'm a very big advocate of budgets. So what I'm going over right now, in essence, is the foundation of that, creating your budget and looking at your at a big picture as to how you're spending your money, all the money that is coming in, and where is it going. And don't forget, the idea of a budget is to understand what you can comfortably afford, not about how much you can borrow. And let me repeat that because this is something where a lot of people sometimes can fall or become victims of or what I like to say, buying something more than what you could shoot for. It truly is important to have an honest conversation with yourself to truly understand how much you can afford and be comfortable, because one person can qualify for an X amount, but are you going to have enough money left for you to continue to live your lifestyle? So again, it is important that you take into consideration all the things that come once you have a mortgage, because a mortgage is not just your mortgage payments. You have to keep in mind what comes with the mortgage, including property taxes. Are you going to have an HOA where you're going to be living in? You cannot forget the home insurance, and definitely take into account anything that the house might need, such as maintenance, or any repairs, right? So those are the things that when you are creating your budget, you are taking that and setting a little money aside, creating those buckets, what I like to say, and making sure that you're setting yourself for a successful ownership. Because if you don't, again, you might find that being a homeowner might not be as fun as you would have first imagined, right? So again, once you have drafted the budget, make sure that you keep tracking all your spending for at least 2 months and see if it feels realistic. This is going to help you make any adjustments before you begin to seriously look for homes and give you that better idea, right? Give you that idea of how much you can afford in terms of your monthly payments and the range that really is going to fit into your financial life. All right. Something else that we advise for everyone to do if you are thinking about buying a home, and that is to check and review your credit report. Looking at your credit report at least 3 months in advance is what most everyone is going to recommend. The reason why we said 3 months is because if for some reason you encounter something that doesn't look right, if you feel like you need to dispute, giving yourself 3 months is going to be enough time for you to make any corrections if needed. And again, did you know that getting your credit report is completely free? You can request it uh, visiting the annualcreditreport.com, and you can request a credit report from all the three bureaus. So Equifax, TransUnion, Experian, they will be able to provide you with a copy of your credit report. And we encourage everyone to do this at least, again, as I stated at the beginning, at least 3 months in advance, just in case you come across something that doesn't look right. If you need to dispute it, that's going to be something that you'll be able to do. And by the time you get into the pre-approval process, your lenders review your credit, make sure everything is in line and there's nothing there that needs to be addressed at that time. So again, being proactive is one of the advices that we like to give to everyone to make sure that once you start the journey of home buying, it's going to be one where you're actually going to be walking in with that confidence that you need in order to truly enjoy the process. So now that you gather all your documents, review your credit, created a budget, which again, I cannot emphasize how important that is, and you have all of that, it is time to start looking for that home, right? So thinking about the type of home that is going to really fit your needs. This is where the search is going to begin, right? So it's not just a house. But you have to think about the right location, all the features that the house is going to have, and the overall fit for your life, and most important, your budget. So let's talk about searching for the house. As you begin searching for the home, location is one of the first things that most everyone is going to think through, right? The home itself is important, but where it's located can have a major impact on your daily routine, budget, and long-term satisfaction. So you want to start by considering the area or neighborhood that you would like to live in. Think about your commute to work or school or other places that you normally visit on a regular basis. If public transportation is important to you, look how accessible it is from the areas that you are thinking about buying. Property taxes is definitely another one here too, and this is actually a big one. Taxes can vary by zip code, by location, by county or city. And believe it or not, it can have a huge impact to your budget. Let me just give you an example. I actually I live in the DC area. I'm in Prince William County. I own a single home here, and I also happen to have a property in the city of Alexandria. My home in Prince William County, it's not that big. It's a little over 2,500 square foot. And my condo in Alexandria, it's just a little over 1,000 square feet. But will you be surprised if I tell you that the amount that I pay in taxes um, in Prince William, it's a little less. I'm sorry, yeah, it's a little less than the amount that I pay in taxes for my condo in the city of Alexandria. You know, if you ask me, the math is not mathing because I have a much bigger space. The land here is a lot bigger versus the tiny little spot of the condo that I have over there in the city of Alexandria. And believe it or not, that truly impacts on how much I had to send as far as my mortgage payment. So think about that again on how important it is when you're searching for the house to look and make sure that you are taking all of that into consideration. Because even if the purchase price fits your budget, higher property taxes could make the overall payments a little more less comfortable in my opinion. Now, it is also helpful to think about what you want nearby, such as do you want to live near grocery stores, parks, libraries, shopping, healthcare, or anything that you will consider as a priority, right? These everyday conveniences can make a big difference once you're living in your home. And finally, we want you to take into consideration things like the noise, traffic, parking, and the overall feel of the area. And let me emphasize a little bit on this particular point here. Um, Parking. I'm using myself here as an example. I remember having to always try to leave my the office where I worked on time because if I left 30 minutes late, trying to find parking in my condo was a little bit of a nightmare. Obviously, that's not the case for where I live right now because it's a single home. I'm in a cul-de-sac, so parking is the last thing I have to worry about now. But I go back and I have flashbacks or maybe PTSD, I guess if we can put it like that, of having to worry about parking and the traffic as well too. So again, all of those things is something that you must take into consideration whenever you're looking for your house. Also, beyond the location, it's also helpful to separate your needs from your wants before you start to go and see homes. Start with the basics like the number of bedrooms and bathrooms that you truly need. Then think about the square footage, the layout, or the type of home that fits your lifestyle, whether it's a single home, townhouse, a condo, or another option. Outdoor space is also something another thing that you definitely want to take into consideration. A large yard, a patio, or a garden may be important to you, or it may simply be nice to have if the rest of the home works well for you. The same is also true for the type of kitchen that the house has, the finishes, the design features. Some things can be updated, I'm sorry. Um, some things can be updated later, while others may be hard or more expensive to change. And don't forget that before you get too far into the search, identify your non-negotiables and share them with your real estate agents. That is going to help you narrow your search and keep focus on homes that truly fit your needs, lifestyles, and budget. So this, I will pause here for a second and also emphasize the importance of finding a realtor that is really truly going to work for you rather than for their commission. So when you going into this journey, there are two partners that you must have and partners that you truly feel that are going to make this journey itself one to enjoy rather than to add stress. And that is having the right lender and second, having the right realtor. With that being said, let's say you find that house that meets all your needs and hopefully many of your wants. And don't forget, if you find something, but it's missing a few things, it's totally fine. It's totally fine. Don't be discouraged. But if you already find something that is truly hits pretty much all of your buckets that you say, you know what, I need 3 bathrooms, I need at least 2 bathrooms. I want to have that the big kitchen island, you name it. And if that home has all of that, then it is now time to make an offer. So once you find a home that feels like the right fit, the next step, again, as I stated, is going to be to make the offer. Your real estate agent is going to help you decide what to include based on the home, the market, and lastly, the budget. As you can see, budget here is becoming a trend, right? So don't not take that for granted. A budget is truly, truly important because one of the biggest decisions that you're gonna take into consideration whenever you are getting ready to submit an offer is going to be that offer price. And this is the amount that you're asking the seller to set for the house. Your agent is going to help you compare similar homes, review the market conditions, and decide what feels realistic, and lastly, competitive. Your offer also is going to include a couple of contingency if you choose so. There's conditions that must be met for the sale in order to move forward. Common examples include inspections. You want to definitely want to include that particular contingency there, that the home must have an inspection. Another one is going to be an appraisal. You want to make sure that the home gets appraised by a third-party company. And lastly, the financing contingency. That is something that most people will typically put in a an offer once you're getting ready to once you're ready to send that over to the seller. Um, and again, you may also request the seller a couple of concessions. This is something typically normal, such as asking for the seller to contribute toward the closing costs. I will tell you that when I bought my condo, I managed to pretty much have the seller pay half of the closing costs for me, and I paid the other half. When I bought my single home, I managed to have the seller paid all the closing costs. I didn't pay anything out of my pocket for the closing costs. Now, will that be true or the same today? I don't know. The market is always changing, and it all truly comes down to who is your realtor and what can they do in order to negotiate some of those terms. There is obviously, a couple of limits that a seller might be willing to commit to, and it's as I stated, this is something that you want to have an honest conversation with your real estate agent and also your lender. And don't forget, your offer can also include your preferred closing dates, your moving timeline, and the deadline for the seller to respond. So if you are currently living in an apartment and your lease doesn't expire for another 4 months, then you might want to consider putting that in that offer letter so that the seller has an idea as to when you will be able to move in, and they will tell you whether that is something that they agreed on or if you need to change that. But finally, you may also include the earnest money deposit. This is the money that you put down to show the seller that you're serious about moving forward. If the purchase is complete, the deposit typically goes towards your down payment or closing costs. Most realtors will probably ask you to put at least 1% of the down payment in an earnest deposit. And this is very typical. If you want to do more, it shows the seller that you are a serious buyer and that you mean business. And again, I cannot steer you whichever route that you want to go, but definitely put in a certain percentage that will go into the earnest money, so that the sellers knows that you mean business is truly important. The percentage that that you will do, it is totally up to you and the conversation that you have with your realtor. All right, so you submit the offer and the sellers reviews it and they say, you know what, I like this offer, and I will say, yes, I will accept your offer. And guess what happens now? The fun begins. And it truly is fun because once the offer is accepted, the home buying process moves into a more detailed stage. And this is where you will work closely with your lender to complete your full mortgage applications. And this is truly where everything starts going at a high speed. Like you go full gear on this one, because there may still be a little negotiation or follow-up items with the seller, but it's also this is also when the key lending steps begin, including reviewing the type of loan that you're gonna end up going with, submitting your final documentations, underwriting, the appraisal, and other requirements needed before the loan can be finalized. Especially if you're requesting for a home inspection, and if you put that in there as a contingency, this is when all of this is going to be taking place. So once your offer is accepted, again, the first step is going to be to complete your full mortgage application with the lender that you've chosen. There are several types of mortgages or mortgage loans, I'm sorry, that there will be obviously that are available. And you need to do your research and have that conversation again and determine which one is the right fit for your financial situations. A conventional loan, and again, let me go down the list here of the names that you see here, but typically a conventional loan is one of the most common mortgage options. These loans often work well for borrowers with strong credit profiles and stable income. Then you will probably also see, and this is very popular too, and that is the FHA loan. So the FHA loan is backed by the Federal Housing Administration, and it's designed to make home ownership more accessible, especially for buyers who may have a lower down payment or have a little more flexibility when it comes to their credit needs. Next, we're also going to talk a little bit about the VA loans, right? So if you serve in the armed forces, this is a benefit that you absolutely qualify for. So VA loans, again, it's going to be eligible for all those people that have served or you're currently serving, and also to some National Guard and Reserve members can also qualify for this. This loan obviously is going to offer benefits such as no down payment, competitive rates, and limited closing costs. Borrowers generally they need a certificate of eligibility, which your lender may be able to help you obtain. And lastly, is going to be the USDA loans that are designed for eligible properties in designated rural areas. These loans are also have income and property eligibility requirements and may offer up to 100% financing for qualified borrowers. You may also need to decide between a fixed or a adjustable rate mortgage, or ARM, which I'm pretty sure that's what everyone has heard that term before. Your interest rate stays the same if you choose the fixed rate, or if you go with the adjustable rate mortgage. Obviously this one is going to be fixed for a period of time, and then after that time expires, your rate will be variable. So this is something, choosing this is definitely something that you want to make sure that you talk through with your lender, especially if you're unsure as to how long you plan to stay in your home. It is also helpful to understand the differences between interest rate and APR. Very important. The interest rate is the cost of borrowing the money, and the APR gives you a broader picture of the cost of the loan because it includes the interest rate plus certain lender fees and costs that will be associated with the entire purchase. When comparing the loan options, APR can help you better understand the total cost of borrowing. If you put less than 20% down, you may also see a mortgage insurance in your loan. For conventional loans, this is usually called the PMI, Private Mortgage Insurance. For FHA, for any FHA loan, it's also called the MIP or the Mortgage Insurance Premium. Again, pretty much it's the same thing as the PMI. It's got a different name because this one is through an FHA. And really quick, something that I also wanna share here with everyone, and that is that PMI on a conventional loan may be removed once a certain requirement are met, and in general, I'm sorry, PMI is automatically terminated when the loan balance is scheduled to reach 78% of the homeowner's original value, as long as the borrower is current on their payments then the PMI will most likely drop off. For FHA mortgages, insurance is going to work slightly different. FHA loans usually include both an upfront mortgage insurance premium and an annual premium paid as part of your monthly payments. Depending on the down payment and the loan terms, the MIP may last for up to 11 years for the life of the loan. So you have to be very careful and make sure that you read all that information before you sign on the dotted line. And finally, your monthly mortgage payment may include more than principal and interest. Many payments also include your property taxes, homeowners insurance, and in some cases, your HOAs. And this is what we call your escrow account. And obviously, a lot of people choose this option to have an escrow account because it will typically pay everything for you and charge you on a monthly basis so that you don't feel the impact of paying the full amounts all at once whenever those fees are due, especially the taxes, the real estate taxes. So that's very important to take into consideration. Now, keep in mind of a couple of the things when you are applying for a mortgage, because your lender is gonna review several factors to determine whether you qualify and what loan terms may be available to you. A helpful way to think about this is the four C's, the famous four C's. And this is the four C's of underwriting. Talk about capacity, capital, credit, and lastly, collateral. So let's go one by one. What is capacity? So capacity looks at your ability to repay the loan. The lender will review your income, employment history, your current debt payment or your DTI, and other financial obligations to see how the mortgage payments fits into your overall budget. Next, let's look at capital. Capital refers to your savings and assets. This is going to help show whether you have funds available for the down payment, closing costs, any reserves, or unexpected expenses after you purchase your home. Next is going to be credit, right? Credit is pretty simple. So credit, the lender is going to look at your credit history and score. This is going to help the lender understand how you have managed debt in the past and how you are currently managing your credit accounts. A stronger credit profile may give you more options and could help you qualify for better rates. So again, we cannot emphasize how important it is to make sure that you are keeping track of your credit and make any changes or any disputes if you see something there that doesn't look right. And lastly, let's talk about collateral. So collateral is going to refer to the property itself. Since the home is going to be The home is going to be secure in the loan. The lender wants to confirm that the property value supports the amount being borrowed. So this is typically determined through an appraisal. If you remember, I talked a little bit about the appraisal. This is something done by a third-party company that will go in and appraise the property and make sure that the amount that is being listed and then the amount that you are going to offer, it matches and it's not something that is totally crazy. So again, it is important that you take that into consideration. Now let's talk about what happens after you submit your mortgage application. So the lender again is going to provide you with a loan estimate within 3 business days. This document is not a final approval, but it gives you important details about the loan that you requested. The loan estimate is going to include items such as the estimate of interest rate, what is going to be your estimated monthly payment and estimated closing costs, along with the estimated cash that is needed to close. Other key loan details as well is going to be including that on your estimate. And it's again, this is designed to help you understand the loan and compare options before you're deciding to move forward. And it is important that you take your time to review the loan estimates very careful and ask questions about anything that is unclear before agreeing to proceed. So it's truly important to have, and this is what I stated at the beginning, that having 2 partners going at it and during this process is truly important. The right lender and also the right real estate agents. So after your mortgage application is underway, 2 important steps that often come next are the home inspection and the home appraisal. I think I talked about it on the previous slide. So the home inspection again is designed to protect you as the buyer. It's going to help you identify any potential issues with the property, so you have a clear understanding of the home's condition before you move forward. In many cases, a home inspection is not required by the lender, but it is strongly recommended. I actually will tell you to 100% request an inspection, regardless whether your lender needs it or not. So you typically choose the home inspector, so that it is important to select someone that is qualified and trustworthy. Depending on the type of the loan and the property, there may also be certain property standards or additional review requirements, but that does not replace the value of your home inspection. This is mostly if you're choosing an FHA loan or perhaps a VA loan. Sometimes those have special requirements. So you want to make sure that you are informed and it's aware of all of this before choosing the type of loan that you're going to go with. And also don't forget that your purchase offer may also include the inspection related contingency, as I stated early. If the inspection reveals any major issues, you may be able to negotiate with the seller, ask for them to repair, request the price adjustments if you know there is something that is going to be significantly expensive to fix. And depending on the terms of your contract, you could decide whether you want to move forward or just shake hands and move on to the next property. And let's dive in a little bit and talk about the appraisal process itself, because the appraisal is going to be a little different. Because while the inspection focuses on the condition of the home, the appraisal is going to focus on the value of the property itself. So the lender is going to order this appraisal to confirm that the home's value supports the amount that is being borrowed. As the buyer, you do not choose the appraiser. This is going to be done by the lender, and the appraisal, if the appraisal comes in lower than the purchase price, it can affect how much the lender is willing to finance. In that situation, you may need to bring additional funds to closing, renegotiate with the seller, or explore other options with your lender and real estate agents. Both steps, as you can see here, are very important because they help protect different parts of the home buying process. That inspection helps you understand the condition of the home, and the appraisal helps the lender confirm the value. So let's say that you submit your application, you did your appraisal, you did your inspection, and everything is where it needs to be. So now we are now ready to move to the last step, which is the closing step. This is the exciting part. This is pretty much what you work for so hard. You prepare at least 3 months in advance. You gather all your documents. You went out in the market, looked at the houses, and you fell in love with the home, submitted your application, and everything went through. And lastly, your appraisal and the inspection is complete. And now let's move in to the closing. So, as you get closer to closing day, there are a few important details to confirm so the process goes as smoothly as possible. First thing that you want to do is you will probably be receiving closing documents to review before your scheduled closing. One of the most important documents in the closing in the closing disclosure, I'm sorry, is going to be that you're going to be receiving this at least 3 days before the actual closing day. So it is important that you review this document closely, very carefully, and contact your lender or real estate agent right away if you see something that is incorrect or it's unclear. You may also want to confirm that the closing location, the time, and who needs to attend. Plan to arrive early and make sure you know exactly what you need to bring with you for closing. Also, before closing, you may also you may also complete a final walkthrough of the home. This is your chance to confirm that if there was anything that needed to be repaired, that it got done, um, and also that the conditions of the home haven't hasn't changed, and that your the appliance and everything it's already included. It's part of the agreement, and everything is still there. You also will need to arrange for the utilities to be transferred onto your name by the day that you take possession of your home. So we're talking about the water, the electricity, um, gas if the house is going to need gas. I mean, you name it, all those utility companies will be need to be you will need to reach out and make sure that everything is being transferred over to your name. So, and don't forget that even if you're not moving right away, utilities typically need to be active on the property, regardless whether you are moving in or if you're not moving just yet. And finally, check with your lender or your real estate agent about what to bring to the closing. This often is going to include your photo ID for all the borrowers. If needed, a certified or a cashier check for any funds that have not already been transferred, or perhaps a wire transfer if needed, depending on who is doing the closing for you. Your title company will make sure that you have all of that in order, and you'll be reminded that you need to do so before closing dates. And don't forget that taking care of all of these details ahead of time is going to help you reduce the last minute stress and keep closing day on track. So you had your closing date and everything went smooth. Now you are a proud homeowner. Congratulations, because again, you're officially a homeowner. But don't forget that the journey does not end on closing day. Homeownership brings new responsibilities, new expenses, and new opportunities to protect the investment you just made. Before we wrap up this presentation this evening, let's look at a few practical steps that can help you stay financially prepared and maintain your home with confidence after the closing. One of the first priority is to rebuild your savings. After paying down, your down payment, closing costs, any moving expenses, and other upfront costs, it can be tempting to jump in right away into renovations or decorating. But as a homeowner, unexpected expenses are now your responsibilities. If you lived in an apartment before, something broke, you can just, reach out to the landlord or to the rental office and have them fix it for you. Now, as a homeowner, that no longer applies because guess what? You now become responsible for anything that needs fixing in your home. It is also helpful to keep a separate emergency fund. There should be money that you have to set aside specifically for any unexpected expenses, separate from your regular savings that you might typically have. So it is important that you have set your priorities, and this is something that you should include when you are creating your budget. Another important step is to create a home maintenance plan. Regular maintenance can help prevent small issues from becoming larger. More expensive problems will arise if you don't address this right away or if you don't have a maintenance plan in place. So don't forget to do your seasonal tasks, any routine inspections, change all your filters, clean the gutters, do any servicing major systems such as your AC, your HVAC. And the key of this again is to help you stay organized and on track so that you can be always on the proactive approach rather than reactive. And as you think about repairs and improvements, use your inspection report as a guide, right? So when you have your home inspection, you'll be able to receive a copy of that and keep that in a safe place. So that is going to help you, figure out as to what might need repairs down the road. And finally, make your mortgage a top priority. Falling behind on payments can put your home at risk. So if you ever think you may have trouble making a payment, contact your mortgage services as soon as possible. There may be short-term or long-term hardship options available, and the earlier you reach out, the more options you may have available to you. And don't forget that successful ownership is not just about getting the keys, it is about planning ahead, protecting your investment, and building a strong financial foundation for the years ahead. So now that we talked about that we walked you through the home buying process, let's talk about on how your friends at the United States Senate Federal Credit Union can help you take the next step. Whether you're ready to apply or you're still comparing your choices or simply you're trying to understand what may work for you or your situation that you're currently in, our mortgage team is here and ready to assist you and provide any guidance that you may need or answer questions for you. We close with a quick look at our USSFCU mortgage solutions and how to get started when you are ready. As you think about the next step again, USSFCU offers several mortgage options designed to support different home buying needs depending on your eligibility, financial situation, and the type of home that you're going to purchase. Options may include your typical conventional loan, FHA loans, VA loans, and conventional, I'm sorry, jumbo loans. There are also several fixed rate and adjustable rate options with terms up to 30 years. For qualified borrowers, down payment may be as low as 3%, and the online application process makes it easy to get started right away whenever you're ready. And as always, mortgage options are subject to verification, approval, appraisal, and program requirements. So it is important to talk with the mortgage team about what may be available for your specific situations. The most important thing to remember is that buying a home is a big step, but you do not have to navigate it alone. So you're not by yourself. If you have questions about getting your mortgage ready, comparing the options, or understanding what the process may look like for your situation, Kim Ta, she is our senior mortgage loan officer, is available to help. You do not have to know all the answers before reaching out. Whether you're ready to move forward soon or you still, if you're still in the early planning stages, connecting with a mortgage loan officer is going to help you better understand your options and feel more confident about the next steps. So when you're ready, you can start your application online by simply going to ussfcu.org // mortgage. You can also email us at mortgageadvisor@ussfcu.org, or you can give us a call at 1-800-374-2758 with any questions that you may have. I want to thank you all for joining us this evening. I truly hope that you took something away. And if there's something, the one strong message that I want to leave you with, and that is to create and start working on your budget, because the budget is so important for everyone to have ready to go. And wish you all the best. I know it could be a little intimidating, but trust me, once you have the right partners with you, everything else, it just goes smooth. Thank you all, and let's see if we have any questions here that we may be able to answer. I know Kelly Pasilio, she will be more than happy, or if I can jump in as well, I'll be more than happy to do so as well. Andrea, Ellie?
Yes. So the first question that we got here today, great presentation, by the way. Are there different documents requested from a retiree?
Kelly, you want to take that one?
Sure. Kim, are you still on the line? I can take it if you're not.
Oh, I'm sorry.
I'll go ahead.
I didn't know.
She,
Kim,
she,
Tosh,
she's on her,
she's on. Awesome. Kim, welcome.
I don't know if she was having phone issues. She's calling from her phone, but I'll answer that. For a retiree, you basically you're going to need bank statements regardless. And, to show the deposit. And your retirement income, usually with the government and, or Social Security, you get an annual statement. So that's what we would require in most cases. Of course, if you have other sources of income, we'd have to verify that too if you want us to use that to qualify you.
Thank you so much. And our next question is, can I negotiate realtor fees, and what is the current realtor fee?
You can negotiate realtor fees, and that's something that we can't get involved in. That's between you and the realtor. Technically, there's no set amount. I mean, different areas have, different, what's customary, but we really can't, you can't really say, this is the max or this is the minimum. It's all negotiable.
Yeah, and then if I may add to that, I know they will normally, go after a certain percentage of the sell price. That's what they will normally do, and be very, very be careful or mindful whenever you are choosing the realtor, because most likely they will have you sign an agreement. And in that agreement, again, it should disclose the cost of what it will be, how much of the proceeds that will be going to them. So again, be very mindful and do your research when choosing a realtor, because you might be surprised of some realtors will charge a different percentage depending on their experience, how long they've been in the market, and all of those things that you want to take into consideration. But again, we cannot emphasize how important it is to make sure that you find the right partner, because as I stated at the beginning, this will be most likely the biggest purchase that you will ever make in your lifetime. So having, doing all your research ahead of time, it is truly, truly important. But great question, by the way.
And then we have a few more questions in this one. Who pays for the inspection, property assessment, etc.? And how much do these inspections cost? And what are closing costs? Are they not a part of a bid on the house?
You want me to answer, Milton?
Yeah, go ahead, Kelly.
Yeah, okay. The appraisal and the home inspections are out of pocket. Normally, the buyer is responsible for that. And those are non-refundable. Usually, I mean, in certain circumstances, you might get your money back, but typically they aren't. So you need to be mindful of that when you're in a contract, that especially normally you do the home inspection first before they even order the appraisal, but sometimes they will order the appraisal. The lender will order the appraisal, especially if the settlement date is tight. So just remember that those two things could be, you may be out of pocket if the deal falls through, if the inspection isn't good, or you can't negotiate, you can't come to a negotiation with the seller. Same with the appraisal. That being said, though, if you spend money on that and there's a serious issue and you can't negotiate it, it's money well spent, because it's going to cost you a lot more if you go through with the deal. So, but keep that in mind. Typically, it depends on, with the home inspection, it depends on the square footage and the area. You're looking probably at least $500. $500 is the average, but the higher priced houses or the larger, properties are going to be more. Inspections typically are in that same range, depending. It depends on the work involved.
Absolutely, I agree with that. And if I can add to that as well, as Kelly stated, those are fees that you will be paying out of pocket. Those are not part of your closing costs. And again, doing the inspection is one where you can actually control. You can start research and look for that. The person that you want to do, the company, I'm sorry, that you want to do your inspection. The appraisal that will be typically will be led by the lender. They will have a company that they will send to do the inspection for you, and obviously you are responsible to pay that, and you have to pay that upfront. But as Kelly stated, I cannot emphasize that. That if God forbid the inspection comes back and you come across something that is major, and makes the deal, the deal falls, doesn't go through because of it. Don't be upset. Don't be sad. It truly is money well invested. Those $400 or $500 could translate into hundreds or even dozens of dollars that you could potentially be on the hook for because of the inspection that wasn't done properly. So great question as well.
Thank you so much. And the next question is, what are PMIs and FHH, and what is an escrow account?
Okay, PMI, PMI and MIP. PMI is for a regular conventional loan, and it's if you put down less than 20%, you are going to be paying. It's an insurance premium. Basically, it's a risk. You're putting down less than 20%, so you're going to pay an insurance premium. With a conventional loan, it will usually, as Milton mentioned earlier, once the house is under, once you have more than 20% equity, and you've paid on time, you can usually get it dropped. With FHA, an FHA loan is backed by the Federal Housing Authority under HUD, and the mortgage premium, the actual percentage is usually a little bit higher than a conventional mortgage insurance, because the down payment is less. And not always, but most people that go with an FHA loan, it's because they don't have the down payment, and they may, the income and credit sometimes is a little bit more lax, so you're going to be paying for that. With FHA too, it used to be like a conventional loan where it dropped. It doesn't drop anymore. There may be some instances or exceptions, but just remember, keep in mind that probably if you have an FHA loan, you're going to have that mortgage insurance, which is called MPI for FHA, PMI for conventional. It's not going to drop. So, if you've been in the house and the house is appreciated enough, you might want to consider refinancing, but then again, you got to, it's got to be worth it, for the loan, the interest rate maybe be higher. You're going to pay closing costs again. So you need to do the math, but those are the differences. An escrow account is, what a mortgage company, it's a separate account, part of your mortgage payment. And this is if you're under, if you're borrowing more than 80%, and sometimes less, the mortgage, the tax and insurance is part of the payment. It's broken down. But let me just do simple math. Let's just say you have $1,000 mortgage payment, and that's your principal, interest, tax, and insurance, PITI. And the tax and insurance, when you make your payment, let's just say the principal and interest each month adds up to $800. $200 of that totals your principal, your tax and insurance. That's going to go into a separate account from the lender. So when you look at your statement, you're going to see an escrow account balance, and that's to pay your tax and insurance. And the insurance company and the county that you live in, they're going to know to bill your mortgage company in most cases. And they collect the money, and when it's due, usually twice a year or once a year, the mortgage company makes the payment. So you don't have to worry about it. Occasionally, you will get a notice from your insurance company or your county, with the bill. And if that happens and they're collecting it, you need to let your mortgage company know. You also will you'll still get something in the mail. Usually, though, it's just a disclosure, say, from your insurance company or county telling you what it's going to be. But you need to just always look at your mortgage statement to make sure that that it looks right. Also, too, to keep in mind that taxes and insurance go up just like everything else. So it usually doesn't happen every year, but at some point your mortgage payment will go up because your insurance and your taxes, the value of your house is going to go up. So, and it's usually manageable because it happens slowly, but you want to keep that in mind.
Yeah, and I also want to add to your answer, Kelly, and especially on the escrow account, that's something that I highly recommend for everyone to choose that option. Just mainly because you're making payments every month, so you're not paying the full amount of your taxes up front. You are pretty much breaking it down into 12 payments every month. And so the 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 account itself, the escrow account itself, is responsible to send those payments whenever those payments are due. So you're not having to do that on your own. And another reason why it's important is because if you choose not to go with an escrow account, then guess what happens if you forget to pay your taxes? The county might list your property for sale because you owe taxes if you're not paying your taxes. And then, do you want to be in that situation? I will tell you no, because I've seen it. I've been in this industry for 18 years now, and I had actually happened to a dear friend of mine who his mom's family member, they were a little older and they didn't have an escrow account, and they forgot to send the property taxes for 2 years. Year three, they came across with an order from the court letting them know that the house was being listed for sale at the courthouse, pretty much at an auction. And trust me, you don't want to be in that situation. So important that you go with an escrow account. I cannot emphasize how important that is.
All right, panelist team, get ready for this question because it's a long one. It has a lot of components. So Kelly, Kim, Milton, Carrie, Andrea, bring your A1 game because this is like a pop quiz type of question. So get ready, get ready. I'm thinking of selling my condo and buying a home in North Carolina, where homes are not as expensive. That's very true. My condo is estimated for less than I paid for in 2018. Since the DC area, specifically Bethesda, has been impacted from federal employees' layoffs, along with mortgage rates, do you think DC area will come back and I could buy a house in North Carolina, or are all areas lower than usual? Southern states had an increase in property value after COVID, but do you think Southern home property is still too high? I will settle for more. Of have property values just gone up everywhere the foreseeable future? So what can we say about that, guys? So this member wants to, sell their condo, buy something in North Carolina. Will rates be something that she needs to consider? The area. What do we have to say about this?
Okay, if I understand correctly, you don't have any equity in your house. Is that what I'm hearing?
Yeah, that's what he
Okay.
said.
Okay. Yeah, you really, I mean, right now, the market, it's different in every state, every county, every price point. It's all over the place. I can't really give you a definite answer on that. My advice would be to talk to a realtor in both uh, you said you lived in Bethesda. I would talk to a realtor, or maybe even the person that you dealt with before when you bought the house, if you did have a realtor, and then also talk to someone in North Carolina. Um, I mean, I will say this, and again, I'm not an expert in North Carolina, but I know a lot of people are going down there. I have family members that have gone down there and friends. But it's starting to build up also rapidly. That's where a lot of retirees are going, and people that work remote. So it's really, I really can't give you an answer. Hopefully, things will turn around a little bit in this area. But with condos, unfortunately, especially, I can say this from my own experience. In this area, especially if you're in an older building, they just don't appreciate them. It's not just the housing market in general or the employment uh, statistics in this area. It's the type of condo, and the older ones just typically don't appreciate as much as newer ones do.
Hey,
So,
Kelly.
but hopefully that'll turn around. Yeah.
Sorry, I
Uh-huh.
don't mean to interrupt you, but this person did put another comment. They do own their condo free and clear.
Oh, okay. Okay. I thought they said they were upside down. Okay. Well, then that's good. I mean, with prices, like I said, though, it's really hard for me to say. I mean, I know they're slow right now. They haven't appreciated as much as single family homes or even townhouses. But I would talk to a realtor. They could probably give you advice more so than we could in that situation.
Yeah, no,
And
absolutely.
what you may want to even do is if you're serious about North Carolina, you may want to have if you have a realtor that you feel comfortable with in this area, they can give you a decent referral sometimes with another in another state. Rather than you just going down there and knocking on a broker's door. That would be my suggestion. Does that help with your question? I just want to make sure. I mean, I'm sorry I couldn't give you, definite answers, but did I explain it?
I believe you did, Kelly, because she said thank you for all your help and this webinar. So I believe that you knock it out of the park. Yep, the person said yes, thank you. So that's the reason why, as you can see, we bring these experts to these webinars because they know what they're talking about. And we want to make sure that we answer all of your questions. And there's a follow-up question from an anonymous user that goes in hand with what you were talking, Kelly. So does USSFCU only offer mortgages loans in the DMV area? Or do we offer other mortgages outside of the state or the DMV area as well?
Yes, we do. We do. There are some limitations now with VA loans. I don't know if you would even if that would even be an option for you. We don't. You know, we don't lend territories. We can't lend. U.S. territories. But yeah, I mean, usually it's not an issue with other states. But what do you know? Is there a particular state you're interested in? Because I could probably tell you.
If you want a specific answer, you can contact us. Let us
Yeah, I mean,
know.
yeah, absolutely. I mean, normally it's every state,
Mexico.
but we don't. New
New
Mexico.
Mexico.
Yeah, I think that should be fine. But what I would do, if you want, give mortgage advisor a call, um, or email them, and Kim can reach out to you to confirm because not all loan products are available for every state. They are in most, but there are some exceptions. So I would just call, but I think I don't think that would be an issue.
Yeah, and then
Kim would know. I don't know if Kim is still on the call or not.
no, I
I
don't
think
think she's.
Yeah, she had to drop off. She was having phone issues.
Yeah, but I was gonna say that I'm pretty sure New Mexico is fine. I know Texas is one where it's a little more tricky, but I mean, but we'll still do lending there. So please give us a call. 800-374-2758 is the number you want to call. And if you press option 7, you can actually ask for Kim Ta, or you can ask for Kim Fridley or myself, and it will be more than happy to assist you and make sure that we give you that answer that you're looking for.
Thank you so much, you guys, for answering those questions. And I have another one. I'll be ready to close on a new building in approximately 1 year. Is it too early to start talking with a lender about what I need to do to prepare?
Oh,
Kelly, you
I'm
want to take?
sorry. I'm talking and I was on mute. I'm sorry. Never too early. Go ahead and give us a call. We'd be happy to give you information. Of course, things can change, products can change, regs can change, but the basics, we can help you with that. We'd be more than happy to.
Yeah, and I know we normally recommend at least 3 months, but again, the earlier the better. We can truly assist you and make sure that you know that we are giving you the guidance that you need for the process itself. So, but again, it's never too early. I cannot agree with Kelly, anymore. It is never too early. And don't forget, one of the messages that I was trying to convey during this presentation is to always be proactive, right? Never be on the reactive side. Being proactive, getting your budgets, getting all your documents in order, making sure that you have everything in line. And again, do not be intimidated. I know that, and I put myself in anyone's shoes because I was on your side at one point. And I was afraid. I'm not gonna lie to you. I'm being very honest here with what I'm saying. I was afraid to get into buying a property under my name. I thought that one I wouldn't qualify for. Two, that if when I did that I wasn't going to be able to keep up with the property. But you know what? You never know until you actually go at it. But it's important to equip yourself with all the tools that are available. And this type of presentations that we're doing here for you, it truly is a statement of that. And again, I wish I would have participated in a webinar like this and would have given me the confidence that I needed. But now I'm able to come in and do this type of presentations. And I feel great about it because hopefully, we were able to answer some of your concerns or any of your fears that you may have when it comes to buying a home. So, but thank you.
And I believe those are all of the questions. Eddie, do you see any more questions?
I believe, Andrea, you are correct. We don't have any more questions. I know we went over a lot of material, went over a lot of amazing specific questions. And that's the reason why we like engaging with our attendees, to make sure that we answer those questions and we can leave these webinars with everybody having that peace of mind that all of their questions were answered. Now, if you have something specific, perhaps after the call, you can think of something and you're like, oh, I forgot to ask that. Please don't, as Milton was saying, reach out to us. We're here to help you. All the people that sit here on the panels team will be the people that will be answering all of your emails. So please contact us. If you want to call us, you can call us as well. We got amazing contact center representatives that can, forward the calls to the correct departments, and we're here to serve you. Since
Hey,
1935, stability, security has been always our priority. Go ahead, Milton.
yeah, no, Eddie, I was going to say, you know what? Everyone in this panel has been active tonight except for one person. And I always love to hear her voice. So, Carrie, do you want to remind us what we got going on next week at 3 p.m.?
3 p.m. annuities. So Michael Schimmel, our partner advisor at Fellows, going to come in and talk about the different types of annuities, the tax implications, and what they are in general, because we do get a lot of questions on those.
Awesome. And do you want to bring us home while you're at it?
Sure. Well, thank you. See, caught me off guard. Thank you, everybody, so much for attending. Thank you for the questions, the engagement. Kelly and Milton and Kim Ta and everybody, thank you. And Milton, you want to finish the job?
Oh, come on. You're doing great. Come on. Just we'll see everyone back again next week. Thank you all.
Yes. At 3 p.m. next
3
week.
p.m. Don't forget the next one is gonna be a special time. But appreciate you all. Have a good evening, and we'll see you again next week.
Bye. Have a good one.
Everybody, take care.